So this is the fourth red day now for the market since we had our reversal date here on February 15th. This is a major downtrend that has been established. And as you can see here, if I go over to the 15-minute chart, we are a little bit below the channel that I have, the purple channel. We have the top line here and then the bottom line. We did close right on it, but we have been discovering a little bit lower prices as of the past 2 days. So what's going to be very interesting is seeing tomorrow as well as Friday to get a gauge on the weekly close. What will happen? Will we have a weekly close back in this channel right here, or will we have it below? If it was below, then there would be a lot more downside to come, especially within the next week. So I am very interested to see what happens there. Additionally, I know this chart has a lot of lines, but we do have this major yellow line right here, the one that goes to the October 13th low. This was tested today, and I'll go to the 15-minute chart here as well. And you can see this one was tested. Also get rid of this. And we closed right above it. So we did go a little bit below, but then closed right above it. So this is going to be very interesting to see what happens during the future session tonight because bulls want to stay above this line. If they're unable to stay above this line, it's going to be a very quick sell-off to about 3,900, which could happen within a couple sessions at the most, just because this line is so significant. And the reason why I chose that 3,900 is because that is the next major support level. We have a demand zone here, and then as well as this all-time high or SPX all-time high trend line. This is the one that connects to the all-time highs. Reference this a lot in previous videos. Connects to previous resistances that we've made before falling. So this one is going to be a very major support and retest, because if bulls lose this one, first of all, we have to get below this level right here around 4,000, which I do expect will happen. But if bulls are unable to hold this one over here, this basically makes all of the past 2 months a fake breakout. And once we get back below this level, which I expect will happen here within the next month or so, then it will be a lot more downside to come, because when you have a fake breakout that shows a lot of weakness, buyers aren't able to support the price to continue higher. So then it just is bears that take the wheel, and a lot of those longs end up having to get liquidated on the way down. So I am watching both of these levels. Again, a lot of lines on here, but the two levels that are the main ones that I'm focused on is this one right here, this yellow one from the October 13th low, and then also the yellow one here, which converges with this demand level. So definitely mark both of these on your charts, because they are very major trend lines that have a large impact on where the market will go here, especially within the next couple months. Additionally, if you see here on the VIX, we had a very key retest right next to this blue arrow here. This is on the yellow trend line. This is from November 4th from back here. You can drag it across. We have two major trend lines. This trend line is very significant because of a few reasons. One being, first of all, yes, it is a bit difficult to do technical analysis on the VIX. I mentioned this in previous videos, not the same as an individual ticker. However, I see an inverse head and shoulders right here, the left shoulder, the head, and then also the right shoulder. Plus, this is a demand range. Every time we've went below or at this 19 level, it has prompted a bounce afterwards. And each time, at least within the bear market so far, it's prompted a bounce to 34 plus each time. So you can see with the wicks from up here. Additionally, if we have a weekly close above this yellow trend line, which right now we are above, but 2 days left in the week, that would confirm upside to around this 26 level, which is the next trend line. Yes, that seems like a drastic move. However, this trend line is very significant. We broke below it all the way back at the start of the year, and we've been unable to get back above. So this trend line is significant. We have a weekly close above that shows strength, and also would confirm continuation to that 26 level for a next retest of this key trend line. So mark both of these trend lines on your charts. You can connect them to both the pivot over here for August 11th, and then also April 4th/5th of 2022 here. So I am monitoring this one because it is a big deal. And plus, I am watching DXY as well. Reference this in many videos. Right now, we are in the supply zone. This is the one that we got rejected hard off of back here on February 17th. So we are back in it. Remember, this is a supply zone. So if you are bullish on the general market, you do want sellers to step in within this zone. You don't want it to shoot straight through, because that would mean a lot more downside for the S&P 500, especially the Dow, which, by the way, if you look at the Dow over here on this chart, it has not been having a good time so far after it broke down from its consolidation. This was 3 weeks of consolidation that had a breakdown. So when you have that much consolidation, it tends to act as a coiling spring. So this downside move will be significant. My target for this would be around this 32,000 range to retest yet again its own trend line that started at all-time highs. Remember, each of the indexes have its own trend line, downward trend line that is. QQQ has it, the Dow, IWM, and as well as SPX, like I showed you earlier in this video. So this would be the target as of now, after it was unable to remain in this range from up here from a bunch of consolidation. So Dow's already weak, plus the dollar is looking strong. Again, the dollar is like I just showed you here from earlier, it is in a supply zone right now. So just keep that in mind. Overall, unlikely it's going to keep its strength, at least the strength that we've seen from the past a couple weeks so far, just because it's a bit harder to get through these supply zones, as you can see from back here on January 6th, as well as recently, like I just showed you on February 17th. But it will be interesting to see what happens as we get into this. Will sellers take over? Will that help the market catch more of a bid? We will find out very soon, but definitely keep this in mind. Also, we saw a decent amount of puts today, not in terms of quantity, we didn't see too many, but we did see some interesting, I guess, in quality terms for these puts. We saw 380 strike for this one earlier for the 1.4 million in premium for the 421 expiration, as well as 1.1 million in premium for the 390 strike, 317. So we're seeing some more of these out the money puts. Rest of these are fairly deep in the money, so I'm not as focused on them. And a lot of the day we did see quite a bit of puts. If you look over here, just in general for the day, we saw 64% puts to 36% calls. And then also if we look back to the dark pool premium, we had 1 billion worth of premium at the 399.08 level. This is in signature dark pool prints. So I am monitoring these as well. Remember, 1 billion, not too much in the grand scheme of things. So this isn't too insane by any means. Not as insane as what we saw from back here. If you remember the 415.20 and 416.70 range, which were very major sells that I was referencing all the way back when they did hit. And now you can see there has been quite a bit of a downtrend ever since. So these whales were able to get out and sell before we ended up having this downside. So if you are a bull as well, you do want to see some more prints around this range to support that bullish thesis, just because you'd like to see some support around here with institutions backing a possible upside. As of now, we're not seeing that. It seems like it's non-existent overall. And then one more thing over here with Apple. Apple did have a breakdown and confirmation back here on February 17th below this channel and saw some more downside after. It actually had some relative strength today. However, we do have to note this chart structure isn't the most bullish by any means. We do have a double top formation, as you can see here, with these two major wicks. Sellers did take the reins from up here. Also, we saw it previously back here on October 28th. So there is a distribution zone up here with both this day for rejection on February 3rd, as well as a few days ago on February 16th. So we know that there's a lot of sellers up here, but then also just based on the chart structure, it found kind of like a last second support today off the top of this gap level. We have a major gap right here between 145 mid and then also this opening of 148.88 or just around this range. And typically when you see this type of chart structure, it tends to be distribution before the gap fills to the downside. Also note, when this gap fills to the downside, whether it be soon or if it wants to consolidate higher from up here, whatever the case is, when this gap fills to the downside, you will know that there will be a new downward trend for Apple, just because this is a breakaway gap. Throughout 2020 and 2021, we saw a lot of these off of earnings, which is what happened for Apple, to the upside. And once they ended up closing, kind of like what we saw from back here, this is just one ticker that comes to mind, Snap. Once they closed to that downside, as you can see from over here, once this closed to the downside, the downtrend still remained. Yes, we did have bounces from up here, but this is a very key metric for continuous upside. Once a gap closes that's that substantial, like this, a runaway gap that continues to the upside, you will see the majority of the move prior end up reverting to wherever it was before. So just keep that in mind. And other than that though, remember, we have to look at both these trend lines, this yellow one and then also the other yellow one right here. Very key for bulls, at least if you want any more upside to emerge, you do want this to hold. Again, there are a lot more buyers from down here as we saw from the closing price, so I would not be surprised to see a little bit more short-term upside. And as you can see from the closing candle, at least the last 30 minutes, we did see some more buying to catch right back up above this line. But again, the future session tonight as well as the weekly close on Friday is very key to see what happens from now, especially for next week, because we have seen a lot of downside lately. There's 3 gaps to the downside that are left unfilled, which signals a lot of strength and momentum to the downside. So bulls definitely need to get this thing going again, or else bears will be able to continue with that momentum down. So keep in mind, a break below this level tomorrow with volume especially, or a gap down below this volume, means 3,900 is very likely shortly. But then again, bulls, you do need to make sure you can hold this level if you do want to continue to that upside. And then also, on top of it, you do want to be able to fill these gaps as quickly as possible, just because this signals a lot of momentum, like I just said. So other than that though, appreciate you guys watching this video, and I will see you guys next time on Sunday.